What about $100 for a single ounce of silver? Now, does that sound completely outrageous? Or maybe it only sounds that way if you haven't taken a really close look at the plumbing of our financial system. By the end of this, you're going to understand why some serious analysts are openly modeling scenarios that, well, they once seemed pretty much impossible. Let's dive in. This quote it perfectly captures the personality of the silver market. It can spend ages doing pretty much nothing, completely ignored by most investors. But then, when all the underlying conditions are just right, it can move with a speed and a violence that just catches almost everyone by surprise. And here's the thing, the crucial point is those very conditions might be quietly falling into place right now. So our whole mission here at Bullion Signal is pretty simple. We're here to help you find the signal that's buried in all the noise of global finance. We're really glad you're here, by the way, joining what's become this amazing, growing community of clear-thinking investors, people who really value process over panic. Today, we're going to unpack a powerful setup that's building just beneath the surface, one that, honestly, most of the mainstream headlines are completely missing. All right, let's get into the mechanics of this, because to really understand what's happening with silver, you just can't look at the price on the screen. You've got to look deeper. We need to look into the financial plumbing that really governs how money flows through the system. And here's why that's so important. While everyone's distracted by the day-to-day headlines, a fundamental change has already happened. And that change, well, it sets the stage for everything we're about to talk about. Okay, this right here is the single most important fact you need to know. And let me be clear, this isn't a prediction. It's something that is already happening right now. Not hypothetically, not maybe sometime in the future. The Federal Reserve has already pivoted. We're talking tens of billions of dollars a month flowing back into the system, and almost nobody is talking about it. This is not my opinion. It is a verifiable shift in policy. And what's really remarkable is just how fast this whole reversal happened. I mean, it wasn't that long ago that the Fed was aggressively draining liquidity from the system, right? But as bank reserves started to fall to these multi-year lows, you could see the stress start to appear. Emergency lending suddenly spiked. And so quietly, with zero fanfare, the Fed stepped back in. And they didn't do it because the economy is booming. They did it because parts of the financial system were just running uncomfortably low on cash. Of course, the Fed has a very polite, very official term for this. They call it reserve management operations. It's just a very specific way of saying they are injecting newly created money to keep the banking system from seizing up. And understanding this jargon is so key because it lets them expand their balance sheet without triggering all the scary headlines that a formal quantitative easing announcement would. And this whole process has a pretty predictable consequence. See, when the Fed creates all this new liquidity, that money doesn't just sit on the sidelines. It has to go somewhere. It has to find a home. It's looking for a return, and it's looking for safety. So it moves through the system. First, it stabilizes the banks, and then it starts bidding up asset prices. Stocks usually respond first, then riskier assets follow, and historically hard assets like silver respond last. So, to really grasp the scale of this setup, we need to look at it methodically. We've structured this analysis around what we're calling the 4 pillars of pressure. Think of them as 4 separate but very related forces that are all converging at the same time. In this part of our analysis, we're going to cover the first 2 big ones, the foundational pillars that are already putting immense pressure on the silver market. All right, let's dive into the first and, frankly, the most important pillar. Because without this one, the others, well, they just don't matter nearly as much. We're talking about the liquidity flood. This is that rising tide that lifts all boats. The simple fact that the Fed is no longer draining money from the system, but is actively adding it back in, that changes the entire backdrop for every single asset out there. And the scale here it's significant. We are not talking about some small technical adjustments. We are talking about tens of billions of dollars being injected every single month. This new liquidity is busy rebuilding bank reserves, making sure the financial system has the cash it needs to operate smoothly. This right here is the fuel for the next potential move in asset prices. And all that fuel has a pretty predictable effect, you know? Money never just sits still. It flows through the system in a certain sequence. But, and this is the critical point for silver, it historically responds last. And because its market is so much smaller than stocks or bonds, when that big flow of money finally gets to it, the price moves can be the fastest and most aggressive of any asset class, period. So this really requires an essential shift in mindset. For the last couple of years, right, the tide of liquidity was going out. That created major headwinds for all assets. Well, now that tide has turned. It's starting to come back in. And even if it's happening quietly, this new environment is just fundamentally more supportive of asset prices than the one we've been living. Okay, on to our second pillar. This is what makes silver so unique. See, unlike gold, which is almost entirely a monetary asset, silver has this crucial dual nature. It's both monetary and industrial. And that industrial demand, it isn't optional. It's absolutely essential to how a modern economy functions. And what's more, it's growing structurally year after year. Just think about where it's used. I mean, look at this. It shows you the sheer diversity of that demand. Modern economies literally run on silver. It's in everything from the electronics in your pocket to the solar panels on our roofs. It's absolutely critical for electric vehicles, for advanced defense systems, even for medical technology. So this demand isn't speculative. It's physical, it's non-negotiable, and with huge global trends like electrification, it's only going to keep rising. And this is where the core imbalance really becomes crystal clear. On one side of the equation, you have this modern, growing, relentless demand that you can't easily substitute away from. And on the other side, you have a supply chain that is incredibly slow and rigid. You see, most silver isn't even mined on purpose. It's a byproduct of mining for other metals, like copper or zinc. You just can't flip a switch and suddenly produce more silver. So this brings us to a really crucial question, and I'd love to hear your thoughts on this. How does a market actually resolve this kind of conflict? When you've got a rigid, slow-to-respond supply chain, and it's facing demand that is structural and just constantly rising, what gives? Eventually, something has to break that tension. Drop a comment below and let us know what you think. Okay, so let's do a quick recap of where we are. The first two foundational pillars, they are now firmly in place. First, we have a new flood of liquidity entering the financial system, which provides the fuel for higher asset prices. And second, we have this relentless, growing industrial demand that's putting a structural squeeze on a very rigid supply chain. But believe it or not, that's only half the story. In part 2 of this analysis, we're going to cover the final two pillars. And these are the ones that add the truly explosive potential to this whole setup. We're going to dive deep into the real-world supply constraints, what the inventories actually look like, and most importantly, we are going to dissect the fragile paper market, because that's where the leverage exists that can turn a slow price grind into a sudden price explosion. You know, the full picture really reveals why analysts who have ignored silver for years are now suddenly being forced to pay attention. So make sure you subscribe and definitely turn on those notifications so you don't miss the conclusion to this critical analysis. This setup is building quietly, and you're going to want to understand exactly how it resolves.